Welcome. I'm Michael Bickert. Thanks for joining me today as we explore concepts with the objective of improving your management skills and growing your business. Pause the video right now so that you can grab a notepad and a pen. Your goal is to take away something, some kind of action item that you can implement in your business today. You've got to learn something from the time we spend together. And even if it's not something that you learned specifically from a point I made, it may be that I stimulate sort of inspire something or make you think of something else. And that's perfectly fine when I listen to sources of knowledge for improvement. Often my mind wanders, but it is still useful. I come away with something, and that's the goal. You want to make this time useful and implement something. Today, I want to talk about expenses. And I think that this is one of those areas of business that a lot of people don't focus on nearly as much as they should. Of course, you need to control your expenses. And controlling your expenses will give you a competitive edge, and it will improve the viability of your business, the sustainability of your business, and the scalability of your business. So if you're intimidated by financial statements and expense reports and all that kind of thing, don't worry. We'll walk through this very slowly. Some of the things, of course, seem obvious, but that is the thing with management and with running a business. Many of the things that we should do and that are obvious and that we know, we don't do automatically, and we don't exercise discipline and habitually implement these things in our business. And we've discussed before that there is no magic pill. It's no sort of real secret to success. The secret is there is no secret. And when it comes to expense control, it's again something that isn't necessarily sexy and really exciting to talk about, but it is so critical to your business. So I'll give you 4 or 5 or 6 tips that you can go away with and ask yourself if you are already doing these things. And if not, I highly recommend you do these things in your business so that you can beat the competition and reach the levels of success that you intend. All right, the first one is you need to review your expenses monthly. And you could review more frequently than that, but at minimum, you want to review monthly. And monthly makes most sense because you're going to have a monthly financial statement, a monthly income statement from which you can extrapolate expense reports. Now, don't be intimidated by the notion of an expense report. If you're not good with accounting and maybe you run a smaller business and you handle your own accounting, or you have a bookkeeper or somebody like that, you can easily extrapolate expense reports from your income statements. I mean, that's what your income statement is. It's a statement of all the revenues, the sales you made, and then your cost of goods, your various expenses. And the difference between those two is the various types of profit that your business makes. So you have to be recording that in some way. If you're not doing at least that, then we maybe need to have a different discussion, and there are different areas that are lower greater opportunities for improvement for you. But let's say, for the sake of argument, that everybody's watching this video does at least have a monthly income statement from which they can extrapolate an expense report. Now, expense report is, sounds fancy, but really we're just talking about a spreadsheet that lists your various expenses. And most accounting software can just give you an expense report. They have built-in various expense reports, so you don't have to manually add those things up and re-enter the data into a spreadsheet. But either way, however you create your expense report, it's fine. The key is that you review monthly. And then when it comes to reviewing monthly, I would say that you want to start with your biggest expenses first, because those may have the greatest opportunity for improvement. That those may be the areas that you can trim a little bit, and you might find some fat in the larger expenses. Typically, some of the largest expenses within a various types of businesses are your employment expenses, the people that work for you, your payroll is a big expense. Also, your inventory, and lastly, marketing is generally one of the higher expenses. So those are some good places to start. But what I'm saying is sort of rank your expense report in descending order from your highest expenses to your lowest expenses, and then you can drill down. Now, depending on how granular you get with your expense report, you may not be able to see what the composite components of each of the accounts that makes up your expenses are. So they'll have, in your accounting, you'll have more general names for things. Like I said, for example, you might have an employment expense, and you may have to drill down from there. And that's what the monthly review is going to prompt you to do, is as soon as you don't realize what goes in to a particular expense category, that'll prompt you to then do a little bit of homework and go back and see what goes into this. How come this is a little bit higher than I expected? And the whole purpose of doing the expense review monthly is so that you can compare month over month and look at it. So what were my expenses this month and what were they last month? And then by doing that comparison, when there is a variation that occurs that's a little bit of a surprise, that's going to prompt you to dig a little bit deeper and see why. What are the components that go into this particular account? So don't be intimidated by that. Ask your accountant or become familiar with your own accounting software and dig in a little bit more and find out why your expenses are varying from one month to another. Is that consistent with your revenues? Is it expected? And when you come away and you find out that, it is expected, it's something that you had just forgotten, a particular extra expense you made one month or whatever, then you can, move on to the next thing. But often you will find, there is a little bit, as I say, fat here. There's some expenses that we need to look at. If there's any surprises, occasionally you'll find that there's some accounting errors. And of course, you want to clean those up right away. Now, the next tip I want to give you that goes hand in hand with reviewing monthly and being able to compare month over month is to graph your expense reports. Okay, so it's one thing to have the numbers displayed as numbers on a chart that you could just compare in a couple of columns, but I think you're going to find it far more visually stimulating and useful to graph, and then you can track the trajectory of your expenses over time. Are your expenses increasing? And if so, are they increasing commensurate to what you would expect, along with increasing sales and increasing profits? Or are your expenses going up and revenues are flat? That kind of thing is very important. And by graphing things, which is really simple to do, again, most spreadsheet software can take a couple of columns or any number of columns of data and numbers and convert it to a graph in seconds, very intuitively. And that'll be very useful for you. And then you can do things like, you can get more creative on these reports, and you can conditionally format things so that things jump off the page for you. You can assign rules to alert you when something is out of the ordinary. But we won't get too in-depth into that today. But so the first thing is you review monthly. The second thing, you are going to graph it. Present the information to yourself and to your management team, to all of your stakeholders that are involved in expense reviews. Present that in graph form. And then the third thing I would recommend is that you present the data both as a percentage of revenue and dollar figures. So I guess for each expense, we'll have two graphs, or at least two lines within a graph, one representing the dollar figures. Because over time, if the dollar figure is going up, that says one thing to you. It's like, okay, my expense is going up. However, if looking at that same expense as a percentage of revenue, the amount of dollars spent on the specific expense as a percentage of the dollars in revenue, if that percentage is not going up, it may in fact be going down or be flat, then it gives you a different piece of information. It may be exactly what you expect. That, okay, well, we're spending more money and we're earning more money for that expenditure. And so that is the third tip that I want you to do when you do your reviews. Graph them, of course, but put at least 2 lines on the graph and depict the data in both dollar figures as well as a percentage of revenue. Okay. The fourth thing I want you to do is as a best practice, and you're going to have to do this by putting reminders in your calendar, is to choose periodic times where you will shop your expenses around. There are some things that are common expenses you have that, things like insurance, maybe your utilities, it could be payroll. Maybe your payroll expense doesn't vary that much. And I want you to look at those expenses, and once in a while, I would say at minimum once per year, but once per year is a very good time frame to do these things on, but you could do it maybe quarterly or every 6 months. But I would recommend start with once a year, shop around for those things. So maybe as an example, you have mobility and communications. So your telephony bill, your cell phone, your landlines, whatever it is, you have your communications bill. Are you shopping that around? Are you locked into a contract for any number of years? Or is this something that if you just took the time to shop around, the competition, another provider, another vendor of that particular service may be willing to give you a better deal? Often there is a deflationary means or mechanism behind a lot of the expenses that we have. They do go down over time. There are several industries that do. Software and technology are notorious for becoming more and more reasonably priced over time. So look to things like your subscription. Software is a great example. Are there things that you've picked up over time? Now, if you're a new business and a very small business, you may have your finger very closely on the pulse of your expenses because you just see the money going out of the bank account. But as you grow, what happens is you take on more expenses. The growth is a reflection of your success, and maybe you're making more profit. Hopefully you're making more profit as part of that growth, and expenses can get away from you. What happens is you maybe expand your team, you empower other people to make some purchase decisions and to invest in various things that are designed to help you grow, and it gets away from you where you don't have your finger as closely on the pulse. That's completely natural. You can't do everything as your business grows. You need to empower other people to do that. But people often don't go back and evaluate that expense and see, is this the best way we could be spending the money? So shop these things from time to time. You will be surprised how often you're able to get a better deal. And it doesn't mean you have to abandon one vendor and go to another. Sometimes calling the very same vendor of a product or service, they would say to you, yes, we're willing to lower your price on that. You can shop with them, you can negotiate this. And you want to do that at least once per year. Another tip I want to give you is to look at things from an ROI, a return on investment perspective. Now, you might say, well, everything we've been talking about now, the underlying theme is that expenses, you need to have a return on investment. But I don't think that's so obvious when we're doing the boring accounting work and evaluating expenses. I like to look at things in the business like, well, what else could I do with this money? I mean, all the money you invest in any kind of expense could be an investment in anything you want. You could be putting it in the stock market. You could be investing in someone else's business. You could be stuffing some dollars into the mattress. It is your money. You get to decide what you want to do with it. And when you do spend it, that's meant to be an investment in something that pays off. And you should be able to measure the return on that investment. And again, that is usually a percentage. So you would look at, okay, so what is the amount of the expense and how much revenue? So what percentage of revenue? And you can look at that more granular. It depends on what we're talking about here. In one of my marketing videos, I talked about looking at the efficiency of your marketing investments. So that's an example of looking at the return on the investment. So give some exploration and consideration to how you can measure the return on the investment of a particular expense. You may think of something as a necessary evil, so to speak, for an expense. It's like, well, I have to have this. I'm forced to pay these association fees, or these are taxes I have to pay, or my rent, I have no control over that. And certainly you want to focus your attention on the things you have the most control over, but don't dismiss other things that you may think you have less control or that they're necessary. In discussions I've had over the years with business people, I have found that, just having the discussion and questioning gets people to think, we kind of did think of that as a necessary expense for many, many years, but is it really? Could we eliminate that? Is it possible? And the changing market and the rapidly changing times will often present opportunities to eliminate expenses entirely. Right now, what is happening, a lot of people are working more remotely and working from home, and office space, which comes at a premium. The real estate and the brick and mortar location for business is one of the most high expenses that you have, the greatest investments for a business. And when you're able to do things on a virtual basis, you can argue the effectiveness, whether it goes down or remains very effective in the context of your business. But you have to look at that and determine whether you could get a better return on investment a different way. And that goes for every expense. So all of these things, you want to do that. You want to review them monthly. You want to graph them and view them as a graph so that you can see the trajectory and what is the trend, and insert a trend line. See, are you going flat, up, or down in terms of your expenditure? View things both as a percentage of revenue, your expense as a percentage of revenue, and as a dollar figure. Those gives you two different types of data or two different pieces of information that you'll do different things with. You might make different conclusions with those two ways of viewing the information. Shop around, find out if you can drive down your expenses, and consider the return on the investment. So I gave the example of marketing, but what about your payroll? Are you getting the most out of your people? You have to do an inventory from time to time of your people. You should do that as a best practice frequently and take a look. How are you measuring the production of your people, the efficiency of your people, and the return on the investment for each of your people? And then, of course, then you can look to HR to assist you with that. As you develop these habits and you become more disciplined, and you are doing this on a very consistent basis, monthly, you're doing your reviews, and you have all your charts and your graphs and your expense reports set up, and you have various report cards, whatever mechanism that alerts you and draws your attention to things, it becomes easier. It just becomes a habit, and you'll gain insights that help you to improve and refine your reports. So whatever you start off with in terms of expense evaluation today, or what you may have been using in the past, may not be what you use next month or next year. You will find, well, when I did that best practice of shopping around once per year, and I shopped my insurance rates, and I shopped my telephony solutions and my software, and I looked at these things, you will find where there are areas that are very traditionally able to present opportunities for you for expense reduction, and those will be the things that you highlight. That doesn't mean you never have to look at anything else, but you'll find trends, and that makes you a better manager. You're like, based on the experience of doing this and the discipline, you will be able to evaluate your reports much more efficiently and redesign them and go first to those greatest opportunities for improvement, which you've seen historically through experience that these are the best areas for improvement. But you never want to abandon entirely something else. This is a great way to a great project to delegate to people. So if you have other stakeholders on your team that could assist with this, give them a project. Delegate this out to various people, and maybe it's in their department, or as a learning experience, you can ask somebody to evaluate something they know nothing about. They become a more efficient and knowledgeable manager by doing that. In fact, one time I was asked to do an expense report, and I learned a ton and became a lot more confident in my ability to manage that department. And it also gave me focus on what things to look at that I wasn't looking at before that. Something that occurs is in these times where it's really the economically challenging, to say the least, and there's, maybe a lot of uncertainty regarding what's going to happen in the economy overall. What you want to do is really focus on expenses at that point, because revenue, which I think is a more exciting place to focus, the opportunity to generate more and more revenue in a depressed economy, in a recession, let's say, or when things are just, uncertain, that those opportunities go down in revenue. So that doesn't necessarily mean that your profit has to go down. If you can trim on some expenses, I mean, we've all heard the expression about all the furloughing that has happened, the laying off of people. Those are business people making decisions that they have to trim expenses in proportion to where revenues are cut. And sometimes what you do is you come away from these really difficult times, these difficult economic times, with a much greater understanding of expense. So you've ended up improving your management skill, but you trim and you become much more lean. And in doing that, you can hold that through boom times. And now you're, a well-oiled machine. And so when times are booming, you may have not taken the time to really thoroughly evaluate your expenses. But now that you had to, sort of out of necessity, you make it a habit and you create that discipline and you maintain that expense control throughout boom times, and you have a really strong level of profitability at that point. So make sure that you're doing that, because that enables you in a tough market and in a booming market to offer competitive advantage. You may be able to offer lower pricing without sacrificing your percentage of profitability. And then the last thing I wanted to discuss is the concept of streamlining your business and making things run more efficiently as a means to generate some more stringent expense control. So we've talked about, and we'll put a link up here so that you can watch the video, the 7 and 1 bonus 8 forms of muda, or the Japanese word for waste. And the extent to which you can eliminate waste will really speak to how streamlined and how efficient your business is and how much money you're wasting. So spend some time there too. That's sort of the bonus thing. We talked about the first 5 tips, but the bonus one is spend some time not just evaluating the numbers from the financial statement and your various expense reports, but spend some time looking at your processes. And when you understand that there are 7 primary and an 8th form of waste, and you look at that and you streamline things, inherent in that streamlining is better efficiency, and it drives down expenses. And I cover a little bit of that. And because all waste, everything that you're investing, everything that you're doing in your business, all of your operation, all of your logistics, in some way costs money, whether it's it costs resources, and all resources can be represented on a financial statement and taken back to be depicted in some way as a financial investment, even if it's just time. Time is money, as they say. So look to streamline as well as a way to lower your expenses. And then again, you end up offering more value. If you're not doing this and your competition is, and believe me, many of your competitors out there are looking at their expenses, you are going to be left behind. This is all about you being successful. You have to do this. This is not optional. Expense control, as lackluster as it tends to be, it's something that requires discipline, and it's absolutely mandatory. So I'm interested and curious from you if you have some other really best practices, some great tips that the community can learn from. We need to learn from one another. If you disagree with any of the comments I made, please make a comment in the comments. We learn from one another. Perpetual refinement.